Good morning, everybody, and welcome to the Trade the Pool show today with me, Scott, and Deanna. How are you, Deanna?
I'm doing well. Thank you, Scott. How are you doing?
All good. I'm all good here. Today, we're going to be talking about FOMO, and I just can't wait. So Nolly's in the chat with his tickers nice and early. He's got ARM, Roblox, JBLU, and Tesla. JBLU needs to test that low on the 3-month range. We'll take a look at that. And you've got AFRM is sitting on the 200 and AMD over 152 maybe. Okay, we'll take a look at a few of those for you, Nolly. But first of all, we're going to start off with our mindset. So we'll do a few minutes of mindsets. It's over to you, Deanna.
Sounds good. All right. Setting a timer for 2 minutes. All right. You can do your hands overhead if you like, hands on your hips, or even just sitting up nice and tall. So big breath in through your nose. Hold at the top. And big exhale through your mouth. Holding at the bottom. And again, big inhale through your nose. Smile as you breathe in. And exhale. As you're doing this, thinking about what you're grateful and thankful for. Focusing on sitting up nice and straight and tall, shoulders back, head lifted. You can add a bit of a stretch if you'd like to roll your neck, or if you're standing, maybe move your hips a little bit, stretch your back side to side. Focusing on a big, strong exhale. Blow all that stress out. Pausing at the bottom. One more big breath in. And big exhale. Excellent. Great job. All right. So we'll do a little visualization. We're going to visualize our a win and a loss, starting with a loss. So you can close your eyes, look at your chart, imagine yourself entering a trade. And after you enter, you see price start to move toward your stop loss. Pay attention to the sensations in your body that you experience. And focus on sending a signal to your brain that you're okay, this is fine, you're all right. Sit up straight, shoulders back, chin lifted. Like there's a string on the top of your head. You're calming down your body, working on normalizing your breathing, normalizing your heart rate, calming yourself down. I'm okay, I'm not in danger. Focus on your emotions. Whatever emotion you're feeling, you can acknowledge, I'm feeling fearful, I'm feeling nervous. Whatever that is, it's okay to have emotion while you're trading, but acknowledging it can kind of set some distance between you and your emotion. And you can work on turning it down, tuning it down. So it's fine to have emotion, but you don't want that to take over and take control. So turn it down. And the best way to get a hold on your emotions is to focus on your thoughts. So as we're excited or as our stop gets closer and closer, or price gets closer and closer to our stop, the chatter in our head ramps up. And so we're working on turning that down and replacing that chatter with things that are helpful, that serve us, and things that we want to hear and that we want to remember. This is a valid trade. I risked appropriately. Every trader takes losses. This is part of the game. If I want to be a trader, I have to be okay with losing. Take a big breath in and blow it out. And after your stop is hit or after you close the trade, then you're resetting. So you're focusing on starting fresh, whether that means simply clearing the markings off your chart, whether that means standing up and moving around for a minute. Maybe it just means, like we just did, a big deep breath. Maybe you need to walk around the block. Whatever you need to do to reset and start fresh. Okay, so we're going to do another one. This time we're going to think about winning. So this time we enter the trade. You can see the trade on your chart. Pay attention to the sensations in your body. Maybe your heart rate starts to flutter or speed up. Maybe you're holding your breath. Pay attention to whatever sensations it is that you typically experience in your body. And you're working on turning those sensations down, normalizing your breath, normalizing your heart rate. Focus on your emotions that you might be experiencing. And again, just like when we're losing, it's fine to have emotion. Naming the emotion or saying, I'm feeling happy, I'm feeling excited, I'm feeling elated, whatever it is, can help distance you from the emotion, and then work on turning it down or tuning it down. So we're trying to level out those peaks and valleys of the emotions that we experience. And then tuning into your thoughts. I'm not a genius. I'm not a hero. This is just part of what I do. This is my edge playing out. And after your profit target is hit, again, you're going to reset. Big breath in. And exhale. Reset, whatever that means for you. Every trade you take is a new trade. It's not related to the last trade. It's brand new. Okay, so that's it. Thank you for joining me this morning.
All right.
That was
good. Everyone should be ready now. Okay. Thank you for that, Deanna. Okay, let's bring some charts up. Let's have a look at what we've got in the market. I've got something going off in my ear over here, and I think it's the NASDAQ. Let's have a look here. Yeah, let's right, so we're just touching the top of the London range right now. Again, it's another one where we are still pre-market. So but yeah, let's see if that kind of pushes. Deanna, what have you got on the NQ for us? Anything lined up at the moment?
Same thing. I'm just looking. We've been pushing over the highs all morning long, or earlier this morning, I should say, from in between the session. So around 6 o'clock up until 7:30 or so, big pullback, and then now we're hitting over that high again. So we really have not reacted particularly strongly over the high. There was the initial move over. Price reacted a little bit. Price swept that liquidity again, a little bit deeper pullback down, and then is just moving higher again. So if we get a break, that will help clarify the direction where the NASDAQ wants to go this morning. But so far, it's just been pushing higher and higher. There is high impact news today at 9:45, manufacturing PMI, and medium impact news at 10 o'clock, new home sales. Those both could create a little bit of volatility in the market. So far, things have been pretty strong. So the Asian range was slightly tighter than usual. It was 90% of the typical range. And the London Open was slightly broader than usual. So a little bit of expansion during the London range. So same as you, just looking, if we get some kind of reaction lower, maybe there could be a short entry, or perhaps price will just want to keep, taking out the prior highs.
Yeah, I think pretty much all aligned with that as well, Deanna. The only thing I got left hanging down here from yesterday was the whole move from yesterday. I still have this area down here. We never come into that in the Globex session here. Didn't tap into it, so I've got that. I've got the liquidity sell side liquidity pool from the push down from the high of yesterday, and we've acknowledged that this morning as we did the buy side of kind of London, Asia, London, and then. Yeah, like I say, I kind of like that breakout trade that appears to be possibly setting up right now. So we'll see if we're going to break that to the upside at the minute, and more importantly, hold the backside of it around that 430 area. Yeah, because at the minute it doesn't look like right now, until that news kicks in, that we want to come back down to where we were about 17,233 I have in the first instance there. Who we got in the chat? Let's have a look. We have Nolly. Good to see you back, Nolly. How you doing? Muhammad. Shah, good morning. Great Scott, DJ, and Scott C. Welcome. Trader Life, how you doing today, man? You all right? All good here.
And Tiny T.
Tiny. Sorry, did I miss Tiny? There you go. Hello, Tiny. Now tickers, I know Nolly's put some in there. There was one UAL. Did someone say UAL?
Yep, Scott asked about UAL. Good morning, Scott.
Hey, Scott. Let's have a look at UAL. Let's take these sessions off, get the VWAPs off at the minute, and see what we've got. So UAL, where have we come from? Okay, so we're looking at about 41.70 and 42.60 down here. See if anything lines up. Okay, so where we are right now, so 53 to 55 is that first benchmark. Now, United Airlines, I wouldn't necessarily expect to get so volatile that it would want to go to kind of straight to the benchmark 2. That's kind of a small cap thing, or news potentially, or higher catalyst that we could do that. Given a normal trading day, it might not do it, and obviously these, when we look at the bigger caps, they can take longer to play out. So you can see it's taken a number of days for us to get to this benchmark, where we can do that in pre-market on a small cap. So drilling down a time frame here to see what swings we've got in terms of liquidity pools. Got a massive, well, it's a massive move going on there. Let's take it from yesterday's pre-market lows, not the switch on though. That's the switch on, so I'll ignore that one. Let's go with the open. Take it to the high up there. So looking at around 52. So if we're going to get a dip buy on the open, around this kind of 52 to 51.5, I would say, if we can be that patient and you don't have FOMO, of course.
Yeah. I was just going to say, welcome to Carlos. And also Shaw was asking about having trouble even starting the trading day, taking the first trade. And absolutely the meditation and visualization should help. I'm assuming there's some kind of fear that you experience when you're thinking about taking the trade, and maybe even kind of the opposite of FOMO, it sounds like. So tell us a little bit more about what's going on for you when you struggle with that. And also, we're not at that segment yet, but if anyone wants to talk about, if they experience FOMO or not, maybe it's anti-FOMO like Shaw's mentioning.
Yeah, it's a difficult one, FOMO, because for me, that FOMO is to do with that one big bar that you see, that you're waiting for a level, it doesn't quite get there, and then you see that one big bar in the direction that you kind of want to play it. But we will talk about that a little bit later. But that's where it kicks in for me anyway. Okay, so we're backside of this bigger benchmark. So we hit and slammed the pre-market benchmarks yesterday. Let's see what we've got here. Run this in. Let's see what you got on the higher time frame. The benchmark 2, sorry. Let's try and move that up a bit. And then bring this in. Okay, so a possibility of 410, 420 on the cards. What have we got to hold for that to happen? So today we put in a high and then gave that kind of pullback to the sell side liquidity, and now we've come off. So I'm going to take the post-market almost the close, post-market lows, post-market lows, and bring that in there and see that we're just tapping into before the switch on and the switch on, acknowledging that buy side liquidity there. So that's the one that's got a hold for longs. For the shorts, I'm going to take the pre-market high to the pre-market low, and it's already testing that area as well. So they're the two levels for me right now. Oh, there'll be one more. So that's the sell side. The one more is simply the it's looking very colorful this morning, being in a benchmark as well with these. Yeah, would be here. This would be the most recent one. I'd rather it get down to that 270, 265 area, to be honest, than this one, this interim one. But we'll see what it has. But yeah, at the minute, I wouldn't do anything right now. I'd see what the open does and whether it makes a beeline for one of these and then works its way out of the buy side or the sell side and rejects quite harshly with a rejection candle for a short. That's what I'm thinking on that. So it always sounds difficult when you're analyzing market, and when you simplify it down, it's like, oh, so it could go up or it could go down. Then it's like, well, yeah, actually that's what it is. It's just trying to get a bit of edge on which one of those we should take and when we should take it. Well, I think actually gives us edge at the end of the day. But yeah, unfortunately, up, down, and sideways is pretty much it, isn't it? But yeah, just trying to get a bit of edge there. What else?
Yeah. And I love that you said edge too, Scott, because really it's about there's no certainty in the market. So like Shaw is saying that trading is when you're a perfectionist, right? You're looking for certainty. Like a lot of us are used to doing really well in school, getting A's and doing things well. The things that we do we're really good at. The market is kind of funny because it's this very small edge that you're executing over and over again. And at least half the time, typically, you're going to be wrong. And so it's about really capitalizing on that edge that Scott is mentioning, that you need to, win larger than you lose. And the many, many losses that you'll take, keep your psychology in check through that.
Yeah, exactly.
Someone was asking, I believe you, Scott, Muhammad was asking, how do you filter stocks for your watch list?
So I do a lot of preparation here. I think there's more value other than the timing of your trade. The pre-market prep for me with any market really, but it's more so with the stocks is key. So I use the top gainers of the morning. So what's been gapping up from yesterday. So I have those kind of these scanners here. Some of them, if I can grab this into my screen, some of them are like this one's low floats under 1 million. So these ones could run quite quickly so this one, HWH this morning, 10 million shares on that with only a float of 2 million. So we've already rotated that float 5 times. So a lot of demand for that stock means the stock can just shoot up. Doesn't mean it has to stay there. It can come down as quick as it went up because that float can just rotate to the opposite side. But basically I use the pre-market scanners. So there's so here I've got another one that's under 50 million market cap, so it's coming up with similar stocks but not quite the same. So I've got Pally here, HWH, EDBL still on these. And then what I look for other than those two, so they're my ones that I kind of know everybody's looking at. And then what I look at, where is it now? Where is my parabolic? I look at, I then look at kind of what is going nuts this morning. So this would be a live scanner. It's telling me, right, what's moving now, what is kind of going parabolic, basically. What at the minute is kind of going straight up. Obviously, this is looking back in time this morning, but if I see these, I ignore if they're ETFs. It might give me an idea if I see TSL on there that Tesla's going to move today. But SMFL is obviously the one that's been going most recently. Time we got 23. So if I look at SMFL to see what it was doing, you can see that one is now pushing up, and I've got a benchmark sitting up here. So I know there's momentum with this stock. If I was looking to dip buy this too late at this point, but from the pre-market low to the pre-market high, it did come back and grab that liquidity. So if that started coming on the scans around this like 146 time after it's double dipped into here, if I then hear that on my scanner there, the parabolic one, then that's the time I would look to get long this stock, because I'm kind of anticipating it will get up to either the previous high or to the benchmark. So that's how, and I'd filter that by volume. I'm only really interested in the highest volume one. So I'll double click that volume column and say, yeah, I'm just going to look at the top three, let's say, and see how they play out with regards to the liquidity pools and the benchmarks that I've got on my chart. So
and Scott, when you say timing, are you referring to actual, like the clock time, or are you talking about timing as far as timing an entry, or both?
Both. Yeah, both. Yeah. Both. Okay. Yeah. So I'd look for long trades. So 4 till 5 a.m. EST, I'm kind of looking for that push up to one of my levels. And then if it hits and rejects, I'll be looking to short. I don't want to start shorting past 7 a.m. EST. That's kind of from my pre-markets from 4 till 6 EST. Mm-hmm. After that, you can say, so for this is an example here. So this would have been a good short. It's a few cents off like my benchmark, but it's definitely at the bogey level in the middle here for me. So I always slam a line in the middle here. So that would be a decent play. And again, it's only for kind of 50 cents, $1 if you're lucky off this play, but that doesn't mean it's going to fade for the rest of the day. Now, if I'm looking at coming in past this time towards 7 a.m., it starts pushing up again. So I'm not really looking for shorts at this time. Similarly, I would still look for a short play before 10:30, but more to the longs after that time, when the kind of algos get going and it starts to squeeze some people into lunch and after lunch. So yeah, it's a little bit of both. And obviously, I've got the timing bars that this Liquivision indicator kind of predicts as well, which I don't go into because it's just confusing. But if you see vertical lines on my chart, you'll definitely see it on the Nasdaq. Mm-hmm. If you see vertical lines on my chart, like here, to going back some, so I have these vertical lines that come on, and they are predicting from previous swings again. They are predicting when either a high or a low, or when momentum can kick into that market. So I normally do this on the 2 hour. So if I've got a 2 hour bar here, you can see that is a red bar, and momentum would have kicked in at that time. So you normally see a big red bar come in. So normally I'm waiting for that as well. I know if the 2 hours is going to be 5 till 7 this evening, then I'm not really looking to take a big decent sized NQ trade until later on today, kind of thing. So yeah, a bit of both.
So Shah's saying, I'm a software engineer, lots of A's and A pluses, but I wouldn't say I'm the best. Maybe I always aim for that. That's the issue. And I think that is what makes trading so hard. Even if you have the absolute best indicator, the best setup, whatever it is, you can have everything line up for you perfectly, and there will always be uncertainty in the market. And so instead of, we focus a lot of our time and energy on finding the right setups, but a lot of what we need to be doing is focusing on accepting the uncertainty. So if you're feeling fear, going into a trade, a lot of that is the pressure that you feel to be right or wrong. It helps, I think, if you have a systematic approach, even though I think, Scott, you would say your system is somewhere in between discretionary and systematic. Is that right?
Yeah, definitely.
So even with that, though, you have a method for how you're approaching things, and that can really eliminate some of that uncertainty or, excuse me, anxiety related to the uncertainty of if it's going to work out or not.
Yeah. Always have that. It's not. There's always another level with me, isn't there? That's the thing. I've normally got two benchmarks, then I've got the liquidity pool that sits in between those, and I'm always aware that the other one could work. So there's discretion there as to which one I kind of choose at the moment. But generally, I take the benchmarks. Not with a pinch of salt, but I take those benchmarks as a good place for like a 70% shot at getting the right trade if I see the right thing at the benchmark. If it just blows through it, then I have to just respect that and carry on doing a bit of extra work. That
sounds like the perfect description of a probabilistic mindset with full acceptance that you don't. It still may be wrong. Even if it is just like absolute confluence in a lot of ways, it still could be wrong.
Yeah.
Here's the open right there.
I didn't ring my bell. Let's have a look. Let's a quick look over at the NQ. I'm very curious to see if we are breaking out to the upside or rejecting that London high. Right now, it's rejecting the London high. Let's see what we've got here.
Okay. We do have that other high from yesterday, the New York PM session on Monday at 2:30, and we're very close to that. So, we could either turn here after grabbing that liquidity. Well, okay, it looks kind of like that might be what's going on. Or there's this other swing high from yesterday that is fairly nearby. That looks like at the moment, NQ's wanting to push a little bit lower.
Yeah. Yeah, that was a beautiful drop there. Very, very nice. So let's see if it does push over those London highs now, because I've got everything sitting there lining up, but like I said, it will do what it wants, the NQ. So SMFL kind of rejecting off this level at the moment here for me. I have grabbed this back, so just short potentially on here, looking now at 660s. So yeah, that's kind of, again, tried a little bit higher, 714. I thought that would have pushed into that benchmark to get a $0.50 short there, but they've done it straight on the double top. So a big punch up there between the shorts and the longs on the pre-market highs. So there's SMFL. Think where we're looking for that, really. The most recent one normally heads down to it pretty quick if it does it on the open. So $6 is the first instance here. So, and the resting pool is going to be slightly lower because of the aggressiveness of that first push up. So, we've already been there once around 5. So, look out for that one on SMFL. Did that get halted? Yes, it did. It's just been halted, so you're going to have to wait 5 minutes to see how that one works out. What else?
Sorry.
That's all right. All right, you've gone for the long of the London highs. Brilliant. You're in the money. All right, HWH is well, deep into its buy side liquidity pool there. So just looking below 150s, if we do get a touch below 150s there, its benchmark was huge. It used all of it on the pre-market. There was one up there at 320, but I thought it might work its way out of here first. Let's see if the bottom of this really holds at 160 or not. Let's just I've done this a little bit earlier, so I think we may have put in new highs, so that might be a little bit lower now. One sec. Yeah, let's bring that in. Okay, so that's working from the either the open actually or the US post-market lows. So let's see what we've got there. Don't write HWH off just yet. Going to give it 140s now. Neo I kind of liked yesterday. Oh, wow. Oof, all right. Yeah, Neo I liked yesterday. The other thing I scanned for is relative volume, and Neo had almost 3 times relative volume yesterday. And look at what happened with the price. It was a momentum day for Neo yesterday. Did it help Tesla at all? Is Neo now helping Tesla? No. no, it's not. It's probably thorn in the side of Tesla actually, but yeah, that's let's drag this across, see if Tesla can hold that up. Got these two kind of execution, best execution out at 140.25 and up there at 144.50, which we kind of just missed on Tesla.
Tesla had earnings today too. Was that this morning or afternoon? And the PM, it looks like.
I think it's PM tonight, isn't it? Yeah, I think it's PM. I've got it somewhere. Oh no! Yeah, no, it's PM. It's PM. Yeah, the next one's AM though. So yeah, so maybe a bit of a best execution work and not a lot more on Tesla then ahead of that decision. All right, let's have a look. What else we got? Spot. Spot is going on. So Spot's just into its sell side, or have I drawn that as a? Normally be drawing benchmarks. Yeah, no, that's a benchmark, not a sell side. I must have drew that wrong earlier. So yeah, Spot up there at benchmark. There will be another one above it. Let's see if we get any rejection here. Just off it a little bit on Spot. Let's see where its best execution was for Spotify. Yeah, smack into its best execution level. So this is really a decision point. Okay, so there were sell orders to execute on Spotify this morning, driven by the opening range in the driven by the range in the pre-market. So it's just tapped into that, just shy of the benchmark. So that's where seeing it come off. Now, if you do get above that 314, it could accumulate up here for a drop. So let's see what we get. We will have to hold the buy. Actually, let's do the whole pre-market here. Pre-market low to the open high is down at 288. So that will be a resting pull today. It's huge. Most recent one going to be very close to it already. So 304 on Spotify for me. If it's going to go any higher, it's got to make 314 or just 313 and a half. That's real micro on it. But yeah, so if we can close above that sell side liquidity, we can see upside. If not, it would come down and grab liquidity to the buy side on Spotify. Anything else? RBLX.
Still waiting on the NASDAQ. We haven't gotten a push lower, but like we talked about, we have news coming in about 7 more minutes. So we might wait to pick a direction until then, perhaps.
Did you go for more than 15 points? Okay. Roblox, bit sketchy for me, Roblox at the moment. Let's have a look. Yeah, I don't fancy Roblox right now. Let's have a look at. If you do, it's the switch on kind of gave you an indication there. It's buy side pull sitting there. I mean, it's very off its lows here. Is there a catalyst for this? Only really some analysts trying to pump it a little bit. Sure, that's in their interest to do so for JP Morgan.
Scott, what makes you say that? What are you seeing that makes you?
So I'm just seeing just looking at the news here on if I put RBLX in, I just check that is the most recent news.
So you have me watching the Russell, and the Russell is pushing higher this morning. The NASDAQ is still kind of hanging out kind of where it started. We haven't really seen a move either way, but the S&P is also seems to be moving higher as well. So actually in a really nice kind of trending manner ever since the Asian session, kind of consolidated Asia, started putting in higher highs and higher lows, and it's still moving higher, maybe going for yesterday's New York PM session high. And the NASDAQ hasn't quite jumped on that yet, but it would make sense. Oh, actually it did. It already did take out the New York PM high from yesterday.
Yeah. Yeah, just done. It was holding on to that this morning, wasn't it?
Good morning, Marina. And Dave G, welcome. I think you have another request there for AFRM, Scott. I was looking at this is a high impact news event coming today at 9:45. So this could be interesting to pay attention to in just about 4 more minutes or so. We've already broken out, ever since last night, we've just been in this actually really nice looking trending higher highs and higher lows. At that higher high, just took out that New York PM high from yesterday. And I don't know, potential for continuation, or maybe the news will shake it up a little bit.
Right. Gotcha. What was that ticker? AFRM. Oh, to answer your question on Roblox, so you see JP Morgan upgrades Roblox to overweight. Overweight meaning they, JP Morgan believe that the stock will outperform the benchmark, with the benchmark being the NASDAQ, or the NYSE or the S&P 500, the benchmark index. So yeah, it's a press release that they put out that they've basically upgraded the stock. You can then go and look and see if they've actually bought any of that stock that they think they've upgraded or not, and see if they've increased their position. You can have a look at that on FinViz. But yeah, it's if what the analyst says doesn't align with an increase in that position by that bank that issued the press release, and generally it means they want the household retail traders to get involved. Mm-hmm. Doesn't necessarily mean it's going to go any higher. But that's where we are on Roblox. The buy side liquidity pool there that it's just holding onto at the moment, just pushing out of. If you look at the here we go, just pushing out of it a couple of times in pre-market, a little dip buy as well at the moment. So if it's got any legs on it today, if JP Morgan are correct, you could see through 38.5. AFRM. Sorry, Dave. Let's have a look. AFRM. Okay, what we got? $30 off the lows. Let's have a look. Something. Get this in a bit tighter. So this is obviously following the index, right? This is kind of following the benchmark. Let's say it's close. If I took that to the actual high, we're probably already into the first level, but I don't like to cross over too many candles when I do it, so I'm going to leave it here. So 28.31 is the buy. Oops, what did I do there? Is the buy side. And then looking down a time frame. Oh, so this is a bit of a classic. Look, because I love doing it. I was just saying to Deanna yesterday about we was talking about best execution prices and how they form. And then I was saying, well, yeah, I know I always talk about best execution prices at the open, but actually it exists everywhere. It's kind of like how when the algos take over, and you'll normally find that through, that's like past 10 o'clock. I don't like trading that. There's no 15 points there. Is that they use, like, you can literally, anytime you see something like that where you can see a clear, that looks like something's going on there over a couple of days, and there'll be inside days, right, as well. You'll see them on inside days where the price action of one, so if you've got a day here where there's a big kind of drop and then that becomes one bar on the daily, all these are inside that day. And then you'll find that it will reprice all the way down, and you can literally almost use the same amount and drag it down, and that's where it kind of goes to. And that's where those guys want their best execution price for their buyers. So it doesn't necessarily mean it's going to go to the moon, but it's like price doesn't go down there randomly. It's so very, very close to that. Like I said, if I'd have drawn that to the absolute high, this would have been a touch in. I just prefer to not cross over those bars, like I say. But at the moment, it's probably done it on the smallest scale from yesterday as well. If you look at that one from yesterday, and then it's tacked in, there's those buy orders sitting down there again. So it all lines up for me what those inside days are doing compared to that. So all we've got to go with now then is literally what happened at the lows on pre-market for what can happen today. So those lows at pre-market, we put in, the stretch or the spread, as I call it. And then I'll bring that down a bit because the benchmark 2 is going to be higher. Like I said, wouldn't expect necessarily benchmark 2 to be in play with a mid-cap stock, but a target 33.5 to 30 kind of 5. I always go for the middle if I'm going for a target. Take some off at the first level. I don't hang on for the 35 in this case. And then there's another one, and now that's what I'm talking about: timing. I'm talking about patience. What happens? Does the price action confirm? Because I'm always looking to take the meat of the move between the manipulation area and the first benchmark. But then if it does kind of, it can acknowledge this, come back down, then go again, and then I'm looking for the rejection up here, and that's normally a quick resolution, as is the breakout normally a quick resolution as well, at least to this second profit target here. So
Scott, when your indicator's calculating the benchmarks, I know you don't necessarily look left, but to some degree that indicator must look a certain distance back, right? Is it only to the session, the current session overnight, correct?
I normally work. So I'd work from, so I would go back to yesterday, but when I do go back to yesterday, like I say, so yesterday for me would be a whole range, for example, like I would take. I'm not looking to say, oh, if price hits 32.23, I'm going to sell it. I'm not doing that. And I'm not saying if price gets to 30.38, I'm going to buy it, because it doesn't seem like that's the case at the moment. Pre-market did. But no, what I'm then doing is I'm using that data to predict the best execution is where's the better price for those buyers when the market opens. And like I said, that business is conducted on the open for a lot of business conducted pre-market, but the majority of the business is conducted on the open and within that first kind of 45 minutes to be done. And that's why I use. So I'd assess pre-market and I'd look at the day before, but that's probably about as far as I go back, because that's all that matters. It's the last session. So I'd look back at, so this New York session, I probably wouldn't go back further than yesterday's New York session, but I would also look at Asia and London kind of thing to get a gauge.
Okay, that's interesting.
Okay, there you go, Dave. NIVF for Great Scott. NIVF. Same as yesterday. So it's still benchmark 2 sitting up there yesterday from the open to yesterday's high. It was just similar to this one. That was a bit from earlier data, but pretty much the same thing. We worked in that pool and we done it again, right? There's another one here. If you go from that low to the post-market high, so yesterday's low to the post-market high, another tuck into this benchmark here, and that's where we've pushed out pre-market and on the open nicely. So the bogey level was yesterday. That's the green level, 180. We could double top there. Else we've got a benchmark at 209 if we can continue to push. Didn't turn my tape on, so I've been missing those plays. So yeah, it's a potential there. And to confirm upside, we would have taken that high from yesterday down to the low, and we have to smash the sell side liquidity. It's not quite smashed. It's kind of acknowledged it, let's say, at the moment on 174. So it's got to get through this, a clear close above this for that momentum to come in even further if we're going to push up now to 210. Okay. Noddy, if Qs go higher now, that would be nice. Yeah, you're using.
Yeah, we're getting a big push higher on the Qs. And the Russell and the S&P. Everything seems to want to be moving higher. We have another round of news in 8 minutes. It's medium impact news, so probably not as impactful, but Last round for the morning.
To anything that would be one of them big drops that wasn't used. There we go. That's what I'll be looking for above that gap. And this is the VWAP, by the way, of you can see we used all of these. It's funny how these work out if you like VWAP plays. I like anchored VWAP. So I like anchoring the VWAPs. These have been there off of the economic news releases or any other event for that matter. But obviously the CPI, non-farm payrolls, that sort of thing. Anything that gives me a nice kind of massive push for the session, I would use as a place to draw that VWAP. And they generally last, I'd say, 3 days before they kind of get taken out by another news release. So then, once we get the next big one, it's gone. But yeah, so this morning you can see there was one here that got acknowledged. Then we went to this one and then played back to it. This one was aligned with the buy side liquidity. So for this is when I'm talking about edge. I've got that economic VWAP sitting in there. I've got these moving averages. I prefer these pink ones here for the moving average. You get a deeper play. You get a better risk to reward. Just being a bit more patient with these pink ones. Comes down into the buy side liquidity pool, and then off it kind of runs, and target being the other economic VWAP. So yeah, it's I kind of like that that play. If you're just on a particular stock, you can use a big move. You can use the last biggest move on that. So definitely, if you take a look at what's run well over the past couple of days, EDBL, that kind of did. Yeah, I don't think that's going to be a great example, but if I did anchor a VWAP off of, I did. So a 2-day VWAP coming across here, right? So yesterday its VWAP was here. If I switch the normal VWAP on, you can see today's VWAP is sitting up here in the middle. Let's get down a smaller time frame. Okay, so today's VWAP is sitting up here around $7, but yesterday's VWAP still running is $6.60, and that is from the first initial catalyst news that come out for this stock. So I'm using the open for that. And then if you're looking for a 2-day play, then you can wait for the bounce of the 2-day VWAP and target today's VWAP and above. If you've got a benchmark up there, in my case, that's what I'd be looking for. What else have we got? Anyone else locked out of their Trade the Pool Challenge accounts? Do you mean the actual platform or do you mean the dashboard? Scotty, that's to you.
And also, have you switched over? If you haven't switched over since they made the change over the weekend, that might be the issue. You can contact Val in the Discord and she can help you.
Billy LSS from Trader Life. What we got here? Pally's are being called out in my ear at the moment as well. If anyone wants to take a look at Pally, that was a play from, was it last week? So benchmark hit. Do we want to go? Yeah, I think that's a retest of that benchmark on a short sellers. I'm not going to draw that all in. That was a benchmark. I would be looking to zoom in on these and just look at which ones have been working for us. So you can take the high, switch to the pools. Okay, so bring down to the lows. Okay, so there's that play there at the $12 mark. And then if I bring over the last few days. It's very close. If I took it down to the lows and crossed over those bars, we'd be right smack in it, but I don't like to. But yeah, it's what have we got? So what are you thinking there? Short trader life on that? We can go for the You Choose We Trade today as well. Don't forget, we're not just randomly picking those stocks now. You get to choose your trade and throw it into the chat, and we will choose one of your trades to play. Mm-hmm. The one which we like the look of. So if you want to get involved, put your ticker and your price and your direction in the chat, and we will take a look. Great, Scott. Have you just been locked out? Like, were you in and it's thrown you out?
Scott, Shaw is asking about your indicator that you're using for benchmark.
Yeah, liquidvision.trade. You can get that over there. Liquidvision, spelt like that. Liquidvision.trade. I haven't put the HTTPs in, but if you do, you can learn a little bit more about that over at the website. Thank you very much for asking. It's it's best that I tell you what it's got involved in it when we if you contact me over there, to be honest.
Here goes our next news release. Scott, do you look at only like the main three, CPI, NFP, and FOMC, or do you play off the other high impact news releases as well?
I don't. So for me, the news is obviously, inflation, interest rates all play their role in macroeconomics for sure. When it comes down to actual, like over time, when it comes down to on the day price action, it just goes to the level regardless. It's like it will be the best execution level or liquidity pool, or both of them that it can flick through. Let's see if we get anything off this news level, but I don't think we're going to get a great deal of volatility off this one.
Seems like it just wants to push higher and higher today. I'm assuming that your benchmark is, because we don't have any price action in the last 24 hours or 36 hours even. That is, to the near left. So as far as the weekly open, we're way above, right? Way above that now. So there isn't really any nearby price data.
What to work from?
As far as a benchmark goes, yeah.
Oh yeah, I mean, so let's clear this off. So this is a 1 minute, but when I say, okay. So if I'm looking for a stock that's in play today, I'm generally using pre-market, perhaps post-market lows, very, very close proximity price action. But that doesn't mean I won't look for the stretch or the spread back further if they're if there is nothing else. So like I could tell you now that the Nasdaq's looking at this. Oh my goodness, the Nasdaq's looking at that area there. Okay, so that is the area that will formalize what happens here. So you should see it getting acknowledged, even if I was to draw this in. So again, the manipulation boxes here. So I expect to be tapped into at the top. I expect then to come down to a buy side liquidity pool. That's the best trade you can get, risk to reward wise, because you're literally going from this 17,160 level, targeting that second level really on this after you've been out and come back in and gone again. That's the best trade you could get up to the second level here. Then you're kind of saying to yourself, right, well, I expect the Nazi to go up here in terms of a benchmark, which is aligned, overlapping with the sell side, with the sell side liquidity pool that I mentioned earlier that was hardly tapped into. So take that off again. So what I'd be doing now, like as this moves forward, so if we didn't catch this trade here to that target there, then I'd bring this over and say, well, where is my next buy side pull? And we didn't quite get there on this one, so I wouldn't have actually caught that on a buy side trade. Here's the point, because this is where I think people go wrong with fibs. This is not a fib tool, like I was explaining to you yesterday, Deanna. This is dynamic, right? The more if you watch the box, the more aggressive the price action is, the deeper this is, and fibs don't give you that, right? Fibs
that's
pull a low to a high. But the other thing that people don't do, if you are using fibs, is like the liquidity pool moves with the price action. So if you are using fibs to get your 50%, don't ignore this. Don't ignore this push up and this pullback. Draw your fib from here. Don't always draw it from the A to the B that's clear. Follow it up. Look, don't ignore those little pullbacks. So for example, here, this little pullback here, and I'm on a 10 minute. So you'd see what I mean if you went down to the 2 minute, right? That level there, it tacks into it here. So this could be a 50% fib. I don't know. But all I'm saying is that this is more dynamic. So don't ignore this one here, because the liquidity pool would be tracking each swing. Each swing has its own liquidity pool. And that's why I call them micro and macro, is because the macro hasn't yet been tapped into, which is this bigger one. But each of the micros that we had did get tapped into, and then you don't miss your trade. You don't miss the hit on your next execution.
So is it because it's a swing high, that's why you're identifying that? Or what is it about that area there that you're picking up on? Just because it was a swing high and a little mini pullback?
Yep. Yeah. If I drop down to, if I was to drop, I can't do it on this chart. I can perhaps pull it over in a second if people are interested. But so we create price zones, right, by hitting a button at the top of the chart, right? We create what we want to see because we're saying, right, well, okay, I want to see it on a daily, I want to see it on a 2 minute. But ultimately, if you're looking to code anything, it's just price action. It's just open, high, low, close. So yeah, the market doesn't care about the time frame. It is just price action. So when things in the market are formalized, so people are always talking about the algorithm. I wouldn't say it's the algorithm, but there are algorithms that run and quants that run in the market. And if you put it down onto a tick chart, you will find that everything runs off these buy side pools. I will try and find one in a minute to explain my point. But if I took the time element out of this and just showed you ticks, you would see the ticks are constantly creating new swings that you don't see in one candle and using the buy side liquidity pools or the sell side liquidity pools. And that's when you're coding something, you do what works until it fails. And then you do the opposite. Then the assumption is you're doing the opposite, and that's how those buy side pools works. But there'll be like a ton of them in this run up if you look down onto a tick chart.
I love that. I love it's not a Fibonacci, but it's almost like a dynamic Fibonacci, that you can't actually capture that with a Fibonacci. That's just basically an estimate of where a retracement would, kind of give you a good reward ratio. But that's really cool how this takes into account the speed of, or the the momentum behind how fast price moves one direction or the other.
Yeah, that is it. It's exactly that. It's the speed of the tape. So if you grab one of these over, so you can see, what goes into my ear here is, you'll see the NQ pushing. I want to see, so I've filtered this by everything above 5 contracts. So not really interested in people placing the 1s and the 2s.
Mm-hmm.
But when I see a flush of orders come in, then I'm looking for what is the price action from that. What is the price action doing from that? So at the minute, it doesn't show you on Quantair actually here, but it like I can hear this in my ear now. So this is going quite crazy on big numbers. Normally these big numbers are pretty static, but when they come in, you generally get a nice price movement off it. So when I'm saying I've got something in my ear, it's the speed of that time and sales that I'm hearing. So I have that filter on, and that's those ticks, right? That's the ticks that you get on a tick chart that I'm hearing. Yeah, the money flow it is on, but I don't have anything. Let's have a look. There's nothing shouting at the moment. Let's have a look. That's just gone blank. Top shorts, parabolics. Nothing but on there since the kind of opening wave on Pally. We didn't look at Pally actually. Yeah, so that was the push on Pally. So again, I've got nothing today on Pally. So it's this area down here that I'm looking at. Is that literally, and that's why you kind of put those sessions on it, because it just helps kind of box it up. Where are my sessions? Oh, I hid everything, didn't I? Yeah, so there's a session there down there and for me, that's what I want to calculate from. So using that one to that one. And there's your benchmark up there. So anything above 750, you'd have had to have closed above 750 to get up there to the 9s. If not, you're looking for rejection between 7 and 750. And then if you look left, I don't know, you can probably find something, right, that's going to work. But for me, obviously, this area would have just been a buy-side liquidity pool. So it's they do align, right? Sometimes they align, but I don't know that there's any rhyme or reason to it. It's kind of 50-50 if they do or they don't. Okay, Nolly, thanks for coming in. Appreciate it. CZ00 Shane moving fast. What we've got?
We're coming up to an area where we might see a bit of a reaction from the NASDAQ. This was from last Friday at 8 a.m. Price took a pretty big spill. I'm trying to remember, did we have news on Friday? I don't think so. No, there was no news on Friday, but price moved quite dramatically overnight and through the earlier in the week. I think it was Thursday. Yeah, a big dip down Thursday, and then price kind of came off those lows. On Friday, there was a high put in, a swing high, and we're just about right back there on the NASDAQ. So this could be an area where we might see price react a little bit, or power through that level.
Okay, gotcha.
What it looks like.
Thank
and we're
you.
still on the NASDAQ on the daily, we're well below the 50-day moving average at this point.
Just checking out Caesar. As I'm drawing it, I'll flick this chart over from Deanna's in a sec, but I've got 950. I've got 9. Whoa, it is powering through. Let me just flick back here. So let me just check I've got that right. So just resumed. It was halted halted at 780. Yeah, halted at 780. So another push to the upside. So here is kind of like, like I said, 950 is the benchmark that was put in from yesterday's lows. If I go and look back at the daily, there is more back here. So there is more work I can do on that. There was a benchmark up here, you can see, at 1150. But from yesterday's data, today's benchmark should be 950. But if it wants to go crazy, it can do. But let's check here what the gap ups are doing. So we've had 1, 2 gap ups at the moment on this. Let's see what happens if we get into this level here. All right, so as we're getting close to it, we're looking for some form of rejection, and then me being patient, then generally wait for confirmation of a sell side liquidity, right? So I'll take that price high to the price low, the most recent one that we get without having tick charts anyway, and just draw that in. And if it breaks it, then I'm not shorting yet. If it goes above it, I'm not shorting yet. If it rejects off it, then we can short. Although day one shorts are not my go-to, I should add. Obviously, we do it on the stream because that's what's firing off. But I have a longer term, long strategy, and I generally then look for shorts on day 2, day 3, or a first red day. To see how we've just kind of held that there, just a second. I'd rather see a few more bars, but sometimes it doesn't wait. But what I'd look for now, if we've been gapping up, is the one that is volatility to the downside that shakes all the longs out, which would be a halt down. Money flow. Here's the money flow. So this is what's looking for each of the time and sales across the market to see what is meeting the criteria in terms of share size and speed. And as you can see, CZU is the one that's in my ear constantly at the moment, apart from OPRT and ZAP that's just hit. But I normally want to see these, occurring in a flush. But OPRT, just quickly keep an eye on this, CZU. Yeah, so OPRT is having spurts of money flow, which is reminiscent of a program trade. So probably means that buy side is holding quite consistently. Once here, didn't grab that one, but if you go to that most recent high, this was tacked into here at 307. If you just draw that across, and probably again in a sec. Let's get back to CZOO. This run the other day, so I will zoom out on this one if we don't. Okay, there we go. So that's why if you've got to be quite aggressive with some of these, I don't always, catch them all, because I'd be waiting now. Is that gap down? So there's your halt down. So there's your halt down on CZOO. And yeah, it just didn't quite get to 875, but you've got to kind of anticipate that sometimes if you want to grab the early, more aggressive play. If not, like I said, we've moved down, so that buy side pull is going to move down with it now. So if now we get a few more candles and pull back to 860, that's what I'm looking for. Else the resting target for the session, the morning session, would be at 650 to 570. Okay, so that's all. You have to wait another 4 minutes or so for that to come back. WINT is the next one appearing on the tape. What was we looking? What did we're looking at UAL earlier, wasn't we? So that's still in its benchmark. I didn't put it on my watch, did I? What did I have? A little higher on this, didn't I? You got your 50 then. Did you get your 50? Not yet. Oh, I was actually talking to Trader Life then. But I know what you thought I said. But yeah, it's good. It's a good one today. The 11:15, 11:20 target on Billy, I would have from the push up. See, I haven't got any benchmarks here in Trader Life. I don't know what you're using Trader Life to get your levels, but assuming 1160 was a level that you was kind of looking at, whether that be pre-market high or not, that less aggressive entry that I look for is that sell side liquidity sitting up there. And ultimately, it's normally what gives me the comfort is to zoom in and just kind of drag each one of those swings down and then say, right, okay, either bring the one at the top down a little bit. This is the most recent one. So long as I stay under 1150, the short down should be good. I only need to start worrying if I'm above 1155, but I know that's where Trader Life likes to add. So that's obviously fine. This is what I mean here. See these candles here? See how you get those wicks up and then green bar, red bar. Each of these is a tick micro liquidity pool. I wish I could get ticks on here, but you can't. But each of one of those pullbacks is sell side liquidity, sell side liquidity, sell side liquidity. Is that one? Yeah, another one there. See, so they're all micro sell side liquidities. All right.
The staggered line that you're using, that's the anchored VWAP, the yellowish color.
So these, so I put everything on my chart because I like to see what everyone's kind of doing in you got other chat rooms going on, all that sort of thing. But the white line here is today's VWAP with deviations off of it. The staggered yellow line is a 4 EMA and an 8 EMA. And
what makes the stair stepper on the EMA? Because usually an EMA is smooth, right?
Oh no, I just do it from open close. That creates the stairs. Yeah, you can do. You can mark that up on on style in TradingView. There, it's this one.
Okay.
So step line. It just gives you, if you're trying, especially if you're trading volatile products, you can, or maybe not so volatile. This is what kind of. All right. See, this is what I mean about the NASDAQ, about the Russell being nice, right? If you're doing this, if you're trying to get in this play, you're trying to chase it effectively. If you got in on this color change here, the NASDAQ, guarantee you it's going to pop down and take $500 off you at that point. But a Russell doesn't do that. It's really quite nice. It's, the Russell is IWM, by the way, on Trade the Pool if you want to play the ETF of the same. So it's, you can just, when you take these color bars out, it just behaves itself really, really well. And that's why if you've got momentum on any index, or any stock, these are the, if by trying to code it, if you look at the open, high and close, what moving averages hold momentum is these two. So long as you stay within these two, and that's why I use the open, high and close on these, it just keeps you in, you can hang on to it. So
then do you use that, you get in on your benchmark and then you use that to keep you in, or to kind of understand when it's time to get out? Is that how you're conceptualizing it?
So for me, obviously today I had sell side liquidity here up at 1990 on the Russell. So I'd be looking in the first instance to use that to short. Now that just didn't occur, right? It didn't happen because I stayed above these stair steppers all the way through. And then, like I said, I'm always looking to the previous session on these. So It's letting out. Oh my! So here's the spread. The time I would use the spread on that. Here's the London session. Where's the Asian session? What did the Asian session do? Okay, so the Asian session pretty much aligned. You're very, very close to the London. But for London session, I just bring these across and bring them into New York. And I much rather play the long in this time frame. Yeah, here. I like the trade to occur in before New York opens, but sometimes you don't get what you want. So now I'll be looking for, okay, if I've broken out, and that's what same thing happened on the Nazi when we opened the stream. If we break above the London highs with momentum, which we already had momentum with it, yeah, the color change I would play right here. That's a really nice entry for me to anticipate we're going to blow this. And as we do break that sell side liquidity, there's the bar. That's what comes in with breaking a sell side pull. And then you just get to stay with it. And it's just easier to hold on the Russell compared to the NASDAQ.
Yeah.
Yeah, there's the same thing on the NASDAQ. Exactly the same trade. Yeah. Let's clear some of this up apart from let's take some of this off. Right, there's the London high here, right? There's the London high line. Okay. And it's again exactly aligned with the sell side liquidity pool, which did work for the NASDAQ down to the buy. Then we come up into it and we've done exactly the same thing. And as you broke that, which was the top of the spread that I look for just prior, and as we broke that, you break it on momentum, but you can't hold it, can you? Because it comes back. It literally takes all your profit instantly away. And the NASDAQ does that every time. So if you're trading the Qs or the NASDAQ, have a look at the IWM or the Russell, because it's just much easier to pass a program. Looking at those. Great Scott NIVF double topping. Giving all the game away today.
I know. I was gonna say thank you for sharing that. That's so interesting. I have not I've not heard of using the 4 and the 8 like that. That's really interesting. All of it was interesting. So thank you for sharing with us.
No worries. No worries. So NIVF was double topping. Yeah, it's still going now. Again, same thing here. Just those stair steppers, little pulls, stair steppers. Should stop you shorting that double top, because that did look like a double top 2 bars ago. If you just wait for a close under those, that little, just using it as a confirmation is good. So probably looking to get up to 205. Bogey level sitting here. I can't see the wood through the trees with what little colours here. Looks about 195 is the bogey level. We'll see if we can pay. If you get above that, you'll probably punch it to 205, 210. I'll get some of this off my chart now so we can see what's going on. And it's saying Neve in my ear. I'm presuming that's the way it's spelling N or pronouncing NIVF. Neve. Neve, yes. That's a beautiful long. If we can get some real momentum on the NASDAQ here, looking at 572, see if that sees the next pause. Right, 193. This is the bogey level coming in on NIVF.
You just took out that, just barely tapped above that high from Friday at 8 o'clock, and price is just still moving higher, still pushing higher.
Yeah. Where's Billy? Where's Trader Life and Billy? Hey, what do you want us to trade? What trades you got? I want specifics. We need specifics. Tickers, price, and direction. And then we'll take one. Then I can play the jingle, you see.
Well, we have to talk about FOMO first.
Oh, FOMO.
Today's the perfect day to talk about FOMO, I think. Couldn't have timed it any better because sorry, go ahead.
No, I was agreeing with you. Go on, carry on.
Yeah, it's a great day to think about FOMO because this is exactly it, right? This is, if you weren't in this morning, sometime, early, this is a perfect day to be thinking about that, because really, where do you get in here? There hasn't even been a breather. Price shot up starting at, pretty much bottomed at 815, 820. And there have been a couple little pauses. Here's a tiny little pause. And other than that, price has just continued to march higher and higher, taking out higher and higher swings. So, now it looks like this was maybe looks like it was obvious, but as price was going through these different areas, it kept looking like it might pull back, and then it just has continued to push and push and push. So, yeah, tell us about. Well, do you want to finish your thought, and then we can come back to FOMO, or what do you think?
I'll just look at Billy and CZOO because I think they're moving. Then we'll come back to FOMO just quick. So CZ, it's easier to say kazoo for me. Kazoo is so it didn't. Well, arguably tapped into that aggressively, didn't it? Then it halted and come down. Didn't make it to the buy side liquidities. And this is where I'm saying, well, can 805 hold sell side? It's very aggressive on the way up compared to something that just halted on the way down. But I'd be looking at this 8 area. If we close above 835, then I wouldn't mind betting that this one fails as well. Benchmark could just be a tap in to get that $9.50. But watch out for that short around here if we reject on the kind of 820s, 830s area. And Billy, I was waiting on the same thing for that sell side. Oh, Billy broke the sell side. So yeah, so this is where like sell side is good. What do you go? 1150s to 1140s. So not great risk to reward. We certainly didn't get the 1120s. Doesn't mean it's not on. It just means I'm not getting short yet because we've broken sell side liquidity on that. If I was looking at today's action, I know we've got a big sell side liquidity up there. If I was looking for working off the lows of pre-market, okay, so we acknowledge that benchmark and here again. So this could double top. That is a benchmark, but also got we've also got a benchmark too sitting up there around $11.90, $12. But this is the fourth time this level's had a look. So don't ignore it. If you do want to get short, I'm just going to wait for confirmation. Trader Life took 30 off Billy, going back in for the LSS on another 30. Okay, got you. Thank you very much.
I love what Scott said about having FOMO all the time and realizing or recognizing that there's always another opportunity if you can keep your capital intact. And I think that is actually super, super spot on, nailed it, right? There's sort of an idea that we have about scarcity in the market, that if we don't hop on a trade, like, it's exciting to trade. And I think we all can admit that it is exciting and thrilling to take a trade. Winning, right? But even losing can be thrilling in kind of a twisted sort of way, because we do get kind of an adrenaline rush from that. And so if you're experiencing a ton of FOMO, it's probably driven by the idea that you're going to miss out, right? That's essentially what FOMO is. But recognizing that there's always more opportunities in the market. The market's not going anywhere. It'll be here tomorrow. A lot of products now trade all night long, all day long. So really, scarcity is what is fueling our idea that we're missing out and we're going to miss out on something. And I would love to hear in the chat how you all deal with FOMO, how you experience FOMO, if that's what you primarily experience, or if you kind of have the opposite experience where you are too nervous to get into the market, because those are kind of opposites of the same idea. For some of us, we're compelled to act, and for some of us, we're sort of frozen, almost like the fight and flight freeze idea. So one of the things that can be really helpful, and we can talk about this more, Scott, I'd love to hear what you have done personally, but when you have a system that you use that is at least based in part on rules, and it's fine to have discretion in your system as part of your system, but when you take that out to an extent, that can really help you with FOMO. A lot of times uncertainty fuels FOMO, right? If you're not exactly sure if you're trading something right, or you're doing it correctly, or if you're going to be right, FOMO on top of that uncertainty can kind of like create a toxic fume to get you acting. And that's what we really want to slow down and limit, so that we're making the right choices. So as far as what to do about FOMO, there's a couple things. Let me read through your comments real quick, and then we'll talk about some of the ways. So SS trades, making profits comes second. Keeping your capital is the first goal. That's a great idea. So if you have a method that you show up to the market, you can judge your performance based on not your P&L necessarily, but how you are executing your plan. And that can really help as well, because you can't control your P&L. That's outside your control. You can't control the market. You can't control news. You can't control how the market's going to react to news, expected or planned, right? But you can control yourself. You can control your actions, your thoughts, your emotions. Emotions are super hard to control, but you do have some ability over that. And so at the end of the day, the only thing that you can control is internal to you. But really, FOMO is kind of external, right? It comes from this idea that there's scarcity in the market, and if we don't hop on, we're going to get left behind. Will says, I commit to my mental stop loss and target levels. Also not afraid of taking profits early. That's great, especially for funding challenges. Can be really a great idea to do that. A lot of times we kind of have these like sexy targets, like a 10R, 5R, something like that. But really taking profit often and early can be really, really important for that. Not only do you get to push buttons, right? But we also get that dopamine hit from winning. Every time you win a trade, you get reinforcement. And so having a higher win rate, although you can do it either way, higher win rate, lower risk reward, or higher risk reward, lower win rate, having more frequent wins can be really, really helpful to you psychologically and mathematically, right? It kind of smooths out that equity curve and allows you to make slow and steady growth. Trader Life says FOMO has to be confronted, dealt with in order to become a successful trader. Absolutely. And Will, also, I fight FOMO with trading extra small risk if I enter a trade. Okay. So you're talking about using, if you're sort of FOMOing into something, you still allow yourself to do that, but with less risk. That's a great idea as well. So a couple other ideas that you can help yourself with FOMO is to really work on a full mindset warm up. So we've been doing the breathing exercise, the power pose when we start, and visualization. But you can expand that as well. Really go through it. It doesn't have to take a long time, but 5 to 10 minutes of a mindset warm up, so that you're really getting yourself prepared to be in the market and to rehearse how you want to respond in the market, how you want to behave, and how you want to think. So ahead of time, before you open the charts, before you do any of those things, getting yourself in the right headspace, making sure that you personally are ready to show up to the market in a way that's helpful to you and in the way that you want to show up to the market. You have ultimate choice. You can trade as much as you want, however you want, but you want to make sure that you have a good idea that you're sort of operating from a logical stance rather than sort of an emotion-driven emotion-driven method. And then also self-talk during a trade. So if you're practicing ahead of time what you want to think, what you want to believe, how you want to feel, when you're in a trade, you can continue that process. So continue to talk to yourself. When I'm in a live trade, I continue to talk to myself the things that I want to hear and the things that I want to remember and I want to know. So for example, I would say most people would probably agree that a stop loss is a really important part of trading. I know that a stop loss helps protect my account and that it's prudent to have a stop loss. But of course, when we're actually in a trade, we don't always feel that way. We might want to move our stop or mess around with our stop, because even though intellectually we know that's the right thing to do, when money is on the line and emotions are involved, it feels a little different. So if you rehearse these things and practice these things ahead of time, and during the trade, you're continuing to remind yourself of the things that you know that are true. So for me, that includes if I'm losing a trade, I'll go through the different points. Like, this is a valid trade. This fits my trading plan. I risked appropriately for the size of my account, for my personal risk tolerance, and all traders take losses. And likewise, if you're trading too much, you can use your thoughts again to calm everything down. So telling yourself the things that you want to remember and the things that serve you to calm that emotion down, so you're not constantly feeling compelled to act. So if you think about psychology in general are your thoughts and your beliefs and your emotions. Your thoughts and your beliefs and your emotions drive your behavior, and your behavior can also impact your thoughts, beliefs, and emotions. So if FOMO is if you are over trading and acting impulsively, that's a behavior, then you really need to focus on your thoughts and your emotions. And if your emotions, right, you're feeling this compulsion to act, but you're not acting, that's good, right? But if you're feeling this sort of anxiety, this emotional sense that you're missing out, really tuning into your thoughts and thinking about your thoughts and your beliefs allows you to modify that and change, how you're feeling. So really tuning into your thoughts is super, super key. But you don't want to do that when you're live in a trade for the first time ever. You want to practice that and think about those things ahead of time, so that when you're in a live trade, you know exactly what it is that you want to remind yourself of.
Gotcha. So what are we doing, or what do you do then, apart from kind of trying to calm those thoughts down and kind of reduce that anxiety? Is there anything you can actually do trading wise, chart wise, that you would do in order to kind of mitigate that?
Well, for me, if I'm talking specifically about the chart, being very clear and intentional, like you do, Scott, where you have basically you know exactly what you're looking for. And when a trader doesn't have that, right, especially if they're new or they're a developing trader, they might not have the specifics of their system just yet. That can really create sort of a lack of confidence in what it is that I'm looking for when I trade. So really getting clear on, look, it might not be right, it might not be wrong. We have no idea, right? You never know. There's always uncertainty in the market. But if you have a method that you're going to bring to the market and show up every single time, it helps if you understand the edge a little bit. If you back tested it, that can really help you feel a little bit more confident. But having a particular method that you're gonna look for, like an entry that you're gonna look for, can really help mitigate some of that emotional experience. And again, I always say this: it's fine to have emotion when you're trading. We're emotional beings, and that's what makes us human. But tuning it down and turning it down is really, really important, so that you can continue to act in a rational, logical way. So I think, part of your trading plan is, it doesn't have to be ultra specific, but giving yourself a good idea of what it is you're going to be looking for, and judging your performance on if you took that trade. So if there was a trade that set up and you didn't take it, well, you don't get an A+ for the day, right? Because it's your behavior that you're looking for. It's how you're responding. You could act perfect in the market, follow your trading plan exactly, and end up red for the day, even for the week, right? You could have a series of losing days. Likewise, you could do all the wrong things and end up green. So having a framework that you're going to operate in, sort of a contract with yourself, can help you stick to that and reduce FOMO, and also the uncertainty that develops when you're not sure, did I do it right or did I do it wrong? Because we don't really get a definitive answer with trading, right? You can enter a perfect setup and still lose money on that trade. That creates a lot of anxiety for us, right? Imagine if you went to take a test in school and you have no idea. You have a 50-50 shot and your life depends on your success on that test. That's really confusing and anxiety provoking. So as much as we can take out the factors that create anxiety, then we don't have to deal with the same stress and the same uncertainty and the same unhelpful emotion when we're actually trading. Trader says, yes, write down when you feel FOMO. Write down those feelings to get used to avoiding those emotions of FOMO through your journal. Yeah. So I'm not a big journaler in general. I don't have a diary or anything like that, but I agree with Trader Life. I like to keep it super duper simple. I've done a video on this before. If you haven't seen it, basically I'm looking in my journal. Your broker will keep stats for you, so you don't need to keep your stats. Except it can be helpful to keep like tags, so you kind of identify your trades. But then beyond that, I just journal 3 things. Safety of flight. In other words, did I commit any major errors that could jeopardize my account? Goods. So the things that I did well, maybe I used really positive self-talk throughout the session. Maybe I didn't take a trade and I was patient waiting for my setup, whatever it is. Even if you're on this live right now, maybe your good today is that, you showed up to further your understanding of the market. It can be that basic. You got to give yourself credit where credit is due. And then others are the things that you struggled with or that you want to improve. And FOMO might be one of those things that you dealt with FOMO that day. If you didn't act on that, that could be a good. And then at the end of the week, you look at themes. And if you're just having FOMO one day a week or something like that, that might be pretty good for you. That's not that bad. But if you're seeing it keep showing up, you want to think about really fine-tuning your plan so that you really, really understand your plan and you have the confidence to act when the setup occurs, knowing that the outcome is always going to be uncertain. There's absolutely no certainty in the market, no matter what indicator you're using, no matter what pattern you're looking for, whatever your entry signal, it doesn't matter. You will never find certainty in the market. And so calming these things down where we can is important. And part of that is having a structured plan. It doesn't have to be precise, but it's a plan about how you're going to show up to the market. Any other questions or comments on FOMO?
I think I'll just say to Hoy, Hoy, I'll get to your comments after this segment. I appreciate what you're saying there. So I think, yeah, if we kind of put it onto a chart for the second, and so if you have got FOMO, there's 2 things that I think work like that you can actually that you can actually do is if you do have FOMO, then switch. Most of these programs have kind of a sim environment that you can get onto as well, and save that sim for your FOMO. So only take the FOMO trades on your sim and see how that plays out. Don't leave them to come back for the rest of the day or anything like that. Trade it as you would have traded. So you got in, get out where you would have panicked because you got in, it went straight against you, then cut the trade and see how that P&L plays out. So if you journaling is okay, at the, to do when you've done all your trades and you're doing it and the end of the day kind of thing. But if you're doing it at the time, switch to sim, hit the FOMO trade, and then fine. If 90% of your FOMO trades are profitable, then fine. You can chase your heart away. But I think what you'll find is that your FOMO trades will not be a profitable account on that sim. And at least then it's, you've hit the button, you've taken that hit, you've taken it, you've dealt with it, you've done something, and you'll see how that plays out. The other thing, if you are, and this is kind of where FOMO is going to kick in straight away, right? If you're not anticipating something here from pre-market, and all of a sudden Kazoo appears on your scanners, what is it you're going to do? And I think the way I work with these pools is I'm always waiting for a level, and sometimes I miss, and sometimes I don't, but pullbacks, no matter how micro, especially if you're trading indexes, you've got to trade the pullback. Even something like, I always go on about those momentum trades. A momentum trade with a good catalyst on a stock that is in play is a good trade setup. You can call it chasing, call it what you want, it doesn't matter, but a momentum trade on a stock that's in play, if it's day one as well or day two, is a good play. So this little candle here that pulls back, and this is why I use stair steppers, by the way, because if you do have the FOMO and you've just experienced this candle, wait, you can put an order in down here at 638. If you don't get filled, that's fine. Wait for the next order, then and put one down here at 670. Then you'll get filled. That's when you've got the chance. There's more in your favor of that continuation at this point than there is of it dropping below. When you get these big extended bars, that's dangerous. If that's what kicks your FOMO in, is one of these bars, do not chase that bar, because that's the bar that is almost always running into something, some supply, a benchmark, a liquidity pool, whatever it might be. They're the ones you want to stay away from. The good ones here are literally pullbacks to momentum moving averages. This is the 4 and the 8, and that's why I have it flat. You can literally place an order on the line and have it tap in, or just above the line and have it tap in. Else, wait for the color change, wait for that red bar and to appear, and then get in when price closes immediately above it. You don't have to wait for the close. As soon as price dips below and then comes above that at 695, then you can hit and get in. But like I said, don't be too aggressive with your target on how far that's going to go. A lot of times when you see that momentum, and I hear it all the time, I'll get a flush of orders come on my ear, and it means it's the end, not the beginning. So just watch out for that. But yeah, for me, it's momentum plays. There's a difference to momentum plays with a catalyst on a stock versus chasing big bars like these two here, basically.
And I love what you're saying, Scott, because a lot of times we have this idea that it has to be like this massive pullback or this massive indication that it's a good, it's safe to get in. And you're talking about very, very teeny tiny little moves. That's enough. That could be enough. If that's your system that you're using, that is enough to say, okay, green light, go ahead and enter a trade. And so you have the power as the trader to find the system that's going to work for you. And if that's what it is, that can be a great way to do it. I like what Scott was saying here too. So he started out by saying, I'm still working on a concrete system, but a couple comments down, he says, I was able to see clearly when I was on the wrong side of the trade. And I love that, because even though he sort of is saying his system is still in development, what it's allowed him to do is give a framework. So not necessarily like a right or a wrong, like if he's right or wrong, but like, is this still a valid setup for him, or is it time to get out? So I think that sounds like a really great step in the right direction, Scott. And then he later said he was able to let his runners run without without fear. And I think I did a poll on my YouTube, and I asked the four primary negative emotions that we experience as humans. It's fear, anger, sadness, disgust. And the number one emotion that traders said that they experienced when trading was fear. So fear can go both ways, right? Fear that we're going to miss out, or FOMO, and also fear of even getting in, even taking the risk. And so that fear is really, really powerful aspect that we're confronting daily as traders. And it can go, I don't know about for you, but for me personally, it can go either end. Sometimes, of the spectrum, sometimes I'm really daring, too daring. And other times I got burned and now I'm on the scared to take a risk side. So you want to really work on daily. I'm sure, Scott, even with 20 years experience, you still have to show up and check in with yourself that you're operating, you're kind of already cool, calm, and collected, I think. But as a trader, that if you take a string of losses, you really got to check in with yourself,
Yeah, cool, calm, and collected until that swear word comes out.
I don't know about that.
Yeah, I think that was a great little segment there. I think that was well received, and something that everyone has to deal with. So I think that was a good segment to have today. Thanks, Deanna.
Thank you.
And if you need more of that, we know where to go. Where are we going?
Psychologist to Trader. Yeah, come check it out. I just want to mention Shaw's comment. I'm trying to read here. What is HOLO? Example.
HOLO's a stop.
Oh, I'm sorry. I thought that was an acronym that you were. I thought it was the reverse of FOMO. You said, I have a hard time taking a trade. I don't regret that much if I miss a trade. For example, HOLO, I was watching when it was $5. I was hesitant to take the trade, and in 15 minutes, it went to $30. Yeah, and that's part of it too. That is another scenario where you don't have to have a perfect system. You just have to have a system that's good enough. And if that means taking super, super teeny tiny risk to test your system and find out if it actually is good enough, whether in backtest or in live. I just heard about TradingView is doing a free competition, which is kind of like backtesting plus, right? Like there's no money on the line, but it's a competitive environment. So it'll just amp up your emotion slightly. And that could be really good. But there is no system that gets every single trade all the time. So you are guaranteed to miss out sometimes. And part of the visualization that we do in the morning when we're talking about winning and losing, you can do that same thing, visualizing yourself getting in a trade, right? And visualizing yourself missing out on a trade. And work on rehearsing just like a professional athlete would do. Okay, so I see HOLO, I was going to get in, I didn't get in. How am I going to respond? And you practice those things ahead of time. If that is an issue for you, a concern for you, you're practicing ahead of time because there's no money on the line. There's limited emotion, no money on the line. You're in a good place before the trading starts to work on those things and get your mindset in check, so that you're ready when it actually happens. But I guarantee the best traders in the world, they miss out on trades. That's part of it. And we need to adjust our beliefs to understand that you do not get you don't catch everyone. Thanks for participating in the chat. That it's helpful to hear from you all, and we appreciate you being so active in the chat today.
Absolutely. Yeah, looking back at HOLO, so this was it on the day, and it literally went from, well, this was not the first day, but I'm just having a look at the last push up that it was doing, but it did go from something like $2-3 up to $98, within the space of a day or two. But that's kind of what I'm talking about. Now this would have got halted left, right, and center regardless, right? So you're going to have to wear the fact that this stock's going to get stopped for 5 or 10 minutes and then go again. Now that's going to cause like different forms of anxiety in itself. But when you just in hindsight look at this is the kind of thing that I'm talking about again, is if you've got the FOMO, don't chase these bigger bars. Wait, let that stock come back to these moving averages. You can set a limit order in down here if it comes back to it. And then go. And each one, again, there's only one real color change here. That was down there earlier on in the day. But that's the sort of thing. There's another one here that you could play off, else it comes back. When these stocks are running like crazy and you're getting totally supernova, the only thing you can do sometimes to grab a bit is get in at these moving averages and risk the low of the candle below. That to me is all right. I don't think there's anything wrong in that, but it needs to work instantly on that kind of next candle. And once you've had a couple of hits, if it's not working, then don't continue to try and chase it all day.
And that's a good point too, Scott. Whether it sounds like in the chat we're a little bit mixed with FOMO and whatever you would call the opposite of FOMO, right? Like inability to take the risk. Sometimes whatever your major struggle is, you can sort of combat that issue by making yourself do a ton of it. So if you are struggling with FOMO, maybe you say, I'm going to show up every single day for every session in the week, and I'm not going to trade a single one. I'm going to watch, I'm going to be engaged, I'm going to watch the charts, and for 1 week, I'm not going to make a single trade. You could challenge yourself that way. On the other hand, if you're struggling with the anti-FOMO, I think Shaw was talking about earlier, you could say, okay, I'm going to challenge myself by taking a trade, anywhere or whatever, because your struggle is getting in. And so it's kind of like we confront our worst fear, whether it is not trading or trading, whatever that is. Do it, allow yourself to calm down and realize like you're okay. You risked, $50 or whatever it was, and you're fine. Even if your stop loss gets hit, you can sort of deactivate some of that fear for yourself. And likewise with the FOMO, if that's you, then maybe you take a little break. You treat yourself to a break where you come in and you watch the charts and you just breathe and watch it go on without you. You could do that on the NASDAQ today, watch it continue on without you, nowhere to get in, and you just breathe and you're fine and you'll be back tomorrow and it'll be okay. The market will still be here. But saying all that, we all deal with this stuff. So I don't think this goes away. I think you just have to continually face it and practice it.
Totally agree. So, I mean, I've had a little bit of FOMO today. How I dealt with that, it was on Kazoo. So how I dealt with that was by taking not 500 shares of it, but I took 50 shares of it. So here was my play. I didn't catch this one, if you remember rightly. It did then pull back to my sell side pull and then went red and gave me some rejection. So I got in short. Now, my target was down here, although it was more likely I would have seen any rejection at these moving averages. I would have covered some. But yeah, I shorted that. So instead of taking 500, I took 50 shares and got stopped on the break above. Now, actually, I got stopped. I put the stop above the benchmark. So I got stopped here at 956. But as it was only 50 shares, no harm done. But obviously now it's got to my benchmark. I'm like, okay, so I need to do the same thing again. Kind of, we've got the rejection. That's great. Am I going to get the sell side liquidity up there? Yes or no, but there's fine. If I feel like I'm going to miss that, I'm going to take 50 shares just to be in the trade. I've just done it. So I'm in. If it comes back, then that's my textbook entry and I will add the extra 450 shares on that play. So yeah, just a little bit of size, if you're not switching to sim, can help you out on that as well. I want to address a couple of things in the chat because I know it's not all good necessarily. So Hoy on Facebook is watching us on Facebook and he's come in questioning a couple of the new or amended rules that we've got in. So his question is, so he has to hold the trade for at least 60 seconds. Yes, that is a new rule. I'm not a great fan of it being a a small cap shorter, which we know we get those flushes where if you're in just before the flush lasts, can last under a minute. That's what a flush is. It does it pretty quickly. As I understand it, that there is something technical in the background with those traders that are on sim, so that those have progressed to live, and routing the orders as they do through to the actual broker on the live account needs some time, and apparently 60 seconds is that limit. But yeah, I agree. I'm not a great fan of it being a small cap trader trying to short, and we know those do come along with those flushes. So I've just been trying to anticipate the trade, waiting for my confirmation and not a lot more, and just, counting down the seconds, to that flush. And sometimes you're giving a little bit back. I agree. The other one is the 10-cent rule. Yeah, again, not a fan of it on small caps, but yeah, they are the new rules that have been introduced. On the plus side, they have taken away the 30% restriction, where you're automatically stopped out on one particular trade if it does 30% of your daily limit. That is no longer there, so you can actually manage your risk intraday now, which is a plus. It means you can take a little bit more size. You don't have to take shapes of trades, so you can do it in one hit now. But yeah, you're responsible for that. You won't be tapped out of the trade automatically. So that was yours, Hoy, and then the other one was can't see it now, but someone had a complaint in there about being stopped, or he stopped being taken out and letting it run. I don't know about that. If there is a ghost trade, you can obviously put some support, put a question on support in, and get that log sent over to support so they can see what happened there. If there are issues, I mean, there have been issues, so they will look into it for you. It's I speak to the support guys. You can go over to the Discord. I speak to the CEO on a daily basis. Yeah, these are real people. They are paying out. There's like no issues there whatsoever. Technically, we've had a few issues. We've rectified the dashboard. There have been a couple of ghost trades that's gone through that generally they delete. Once they've found and agree with you, that is what happens. They will delete it and rectify your account back accordingly to as it was before that happened. So hopefully that deals with all three of those questions there. Just don't want to ignore them. They're all part of the chat, good or bad. So hey, Future Day Trader Billionaire, how you doing? I think we're running way over again. Why do we keep doing this? Used to run over until you come on the show, and then now I'm running over every day. Oh, you are still in the chat. You still need to sleep. That was 4. So just replying to that comment there. Right. So I don't have a lot to do, but we are going to recap, although I've kind of already done it. But yeah, let's recap. Okay. Minus CZ00 is just to show you the chart of what I was trying to do here. Like I said, I took 50 shares here, got stopped on there. So I've taken another 50 shares there as we close below the benchmark. If we're coming back to 938, so if we get back up to kind of 938, 950 area, I will add to that position. But again, if I close above that, my stop's always above either the benchmark or the sell side liquidity pool. So if I close above there, then that will be my out for the day. It's been very busy in the chat, so that's the only one I've taken today. Deanna?
I didn't trade anything today. I had that one little trade at the open on the Russell, actually, but no stocks for me today. I was looking for a little bit of a reaction inside this level here, but I was quickly stopped out. So nothing really to report today.
Okie dokie. All right then. Well, thank you everyone for coming today. Appreciate your interaction all through the show, as well as your feedback on the FOMO segment. That was really good. So we'll run through. Nolly was first up. Carlos, how you doing? Thank you for coming. Shah was there. Tiny, don't forget Tiny. I forgot you yesterday. Great Scott, Dave, thanks for coming. Trader Life, Will, Scotty FS, Great Scott, Shah, SS Trades, DJ.
DJ,
just Miss DJ on the scroll down. Miss DJ, Shane,
Mohammed, stock market tips and tricks.
Yep, there you go.
Here's one I missed. Scott FJF. I didn't see that earlier. Welcome.
And the Theo Dixon as well. Thank you all for joining us today. If you enjoyed the show, give us a thumbs up and a like over there on YouTube, and subscribe if you want some more of it. More content. We'll be back tomorrow, same time, same place. I'm gonna let Deanna do the goodbyes today, because I don't know if anyone noticed, but I completely messed it up the close of yesterday's show. But in any case, today, Deanna, you can close.
All right. Goodbye. And thank you so much for joining us. We'll see you next time. Thank you for Scott for a great session today. And everybody take care.
Bye. See you later all. Bye-bye.